Hey everyone, today on Drawbridge Finance, we are talking about gold. Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods, and I'm not a financial advisor. I don't work in the financial industry. I'm not a professional at all, but I do love trading, and I do love making money, and I do have an opinion about money. I do not invest in gold. It is a safe haven buying strategy, and there are times when gold is good to buy if you feel like the market's going to tank like it could do in 2018. We have no idea really what's going to happen. Are we going to see a major correction? Is that going to drive the price of gold up? Possibly, probably, somewhere in that range. Realistically though, over the long term, gold does not do very well. I mean, my investment strategy has always been to make income all of the time. Investing in products that make money over the long term make a lot of money. They just make sense. Investing in things that don't make a lot of money over the long term don't make a lot of sense. Now, of course, I love Warren Buffett. He has been a long time dividend investor, and he is pretty adamantly against investing in inanimate objects, which essentially is what gold is. He did a fantastic interview a couple years ago, and I will never forget it because he talked about like what you can do with gold, and he equated the entire amount of the world's gold to being, if we put it all together in one spot, we would get roughly the size of a 67-foot cubed block of gold, and it would be like brilliantly shiny and like glint in the light because of course gold doesn't oxidize. But other than that, like, what are you really going to do with that gold? And that fundamentally is why gold doesn't appreciate all that much. There definitely are times where gold is at a value and then it goes up in time. So if you're willing to like buy it at a certain price and happen to have the right timing, then you can make some money on gold. But over the long term, it doesn't appreciate very much. If we look at a comparison, Warren Buffett's company, which invests in dividend paying stocks over a long time, when we look at the price of gold now, we know that gold is over 1,300. Yesterday it was like 1,336 an ounce. That's an okay return. It's made some money. It's a couple percentage a year. Berkshire Hathaway shares yesterday were trading at $286,000. $286,000? Like, that is mental. But that is the power of dividend investing in companies that pay out a dividend that actually do things. Investing in oil and real estate and grain, things that consumers use on a daily basis, like banking and coffee and utilities, cell phone bills, food. This isn't rocket science here. What we're doing is we're buying things that people use. So I don't know about you, but I personally don't run out and buy like a bunch of gold. I probably purchased about $1,500 worth of gold in my entire life, and that's it. For me, gold is a no-go. I don't even care if I think it's gonna go up this year, which it probably will in my opinion, but it's a no-go. Gold doesn't pay a dividend, and I don't use it. That's two rules that I can think of right off the top of my head. If you guys aren't familiar with my personal investing rules, I'm gonna put a link right up here. Check out those rules because I follow them. It's what's made me wealthy, and it's really simple. Let's get rich together. Talk soon.